let me introduce my four fantastic speakers. Megan Nab is the Chief Executive of Franklin Payroll, thank you. A hybrid cash and crypto payroll system that helps you streamline your global workforce with tax-compliant payroll and HR management. Prior to founding Franklin, she was the VP of Finance at Serotonin, a well-known and loved crypto player out here. Mary Kaufman serves as the AICPA's Digital Asset Working Group, is the head of Finance and Accounting at Lightspark. Prior to that, she was the head of technical accounting and reporting at OpenSea, and prior to that, head of technical accounting at Meta's Crypto and Payments Division, including for the Novi Wallet and the DM Associated project. Very, very good pedigree, amazing. Christopher Fontenot, Toph? Chris? Yeah. That's a Toph, yeah. Is the co-founder of Request Finance, and is also the head of strategic partnerships with the Request Network Foundation. He is also the co-founder of the Web3CFO.club, a community of finance and operations leaders in Web3. You should go check it out. It's awesome. I think we have a lot of we have folks in there. He's based in Switzerland, so thank you for making the trip out here, man. And finally, Hugo is the co-founder and CEO of Rise, a Web3-enabled global compliance and payroll solution for traditional businesses as well as DAOs to onboard and pay international team members around the world. And Rise just announced their Series Seed funding. Congratulations, buddy. It's a big day. It's a tough market to raise money right now. All right, you guys, let's talk payments. This is, I think we're all pretty excited about this in a general way. So I'm actually going to start, Megan, with you here. Why don't you paint us a picture about the landscape of crypto payments, like from payroll to AR to everything in between. Paint us a picture.
Yeah, so I think one of the reasons why we started up Franklin was because of a frustration of Web3 companies not operating their companies in a Web3 native way. And so, I think that for us as an industry to really be able to grow, we have to sort of dog food our own technology, and that's really where Franklin was born out of this idea where we can help companies pay their teams natively in crypto if they want, pay them in cash if they want. I think that overall there are great projects up here, great projects out there in the crowd to help patch together what a compliant, effective, sort of cost-effective back office looks like. But that's really only come together in maybe the past 12 months or so. So it's a new landscape, and I think it's developing quickly. But I think that we're in the early days of Web3 companies really being able to operate their companies natively on chain.
Yeah. So Toph, I'm going to go for you on the next one, which is I had the pleasure of declaring 2023 the year of crypto payments, but I'm going to make you show my work for me. Why is now the time for crypto payments? What is the confluence of L1s, L2s, blockchains, technology, smart contracts? What makes now a really good time for crypto payments to come to the forefront?
I really think that 2023 is the year for crypto payments in the sense that we've been processing crypto payments since a few years already. And now I can see more awareness. And the people contacting us are not just Web3 degen punks anymore. I see more and more Web2 people diving into Web3 operations. I see traditional companies contacting us to say, how can I process a crypto payment without going to jail? How do I make this compliant? So I don't see yet institutions and authorities, but I see at least traditional companies, which is the first good sign.
Yeah, it is. You're starting to see the crypto companies slowly tiptoe into it. We'll be talking about it later. It's awesome. Hugo, talk to me about from a payroll perspective. One of the big use cases for payroll is international. We'll have both Megan and you. We're going to have you guys talk about this. But what ends up being so complicated about international payroll?
I mean, you have companies that are paying independent contractors, which is pretty straightforward around the world. You don't need to take care of taxes. They're responsible for it. You need to take care of benefits, etc. But when you do want to provide that experience for the people you hire, international team members, you need to have an entity in that particular country. You need to know the local taxes. You need to have a team there. You need to provide benefits, and you need to pay in local currencies or in cryptocurrencies. So, if you're just starting up and you want to hire someone, let's say you're in the US and you want to hire someone based in Brazil, how do you go about that? So that's exactly why we started Rise. We wanted to provide that experience for startups that were growing and actually hire those persons in those particular countries, handle payroll, taxes, benefits, and payments in fiat and crypto.
So we're going to come back to payroll in a second and that side of it. But Mary, let's, we've already been talking, we had Superfluid on stage talking about streaming payroll. Talking about streaming payments in general. I'd be super interested, to tell us a little bit about what LightSpark's doing, because you guys just actually launched last week or something. And then also how you think about the complexities around streaming payments from a, let's say, accounting perspective.
Yeah, thanks for having me. So the way that we think about it is we think that there should be an open, interoperable, dirt cheap protocol for payments that can settle in real time and allows you to easily move money as you send a text message or an email, or that bits and bytes go over the internet, which really we're not finding to be the case right now. I mean, it's a pretty archaic infrastructure. Over 60% are done through ACH, which is kind of low cost but super slow, taking upwards of 3+ days. Internationally, that's SWIFT, which is high cost and slow. And so, when we think about it, we take a step back and we were looking at the Lightning Network, which is a layer 2 built on top of Bitcoin. And we say, okay, well, on this layer 2, we have higher throughputs, lower fees, more privacy, being an L2. And so then if you're able to send these cheap payments and easily send and receive small amounts of Satoshis, which are 1/100 millionth of a Bitcoin, for these incredibly low fees, a natural use case is to get into streaming payments, which Sam from Superfluid kind of took us through the TLDR earlier, which is around these kind of constant over time micropayments. And the reason, so micropayments aren't a new concept. They've been around for a couple of decades, but they never really took off for what I believe 2 reasons. Payment rails weren't up to snuff, and fees. I mean, a lot of times the fees to do these micropayments were greater than the payment you wanted to send. So some of the use cases, being able to send to contractors, pay subscriptions, things that don't really change in value, or things that do, such as creator monetization strategies, so tipping, streaming, reading a podcast, a certain episode, reading a certain article. I mean, I think there's these ripe cases for creator monetization as well, which I think we've been pushing the creator economy for the last couple of years really strong. A lot of that is tuned to the NFT markets. So I think payments in 2023 will bring a lot more of those new use cases too.
Yeah, it came up, when Jim was talking to Tina and Flav earlier, it came up there, which was, one of the major themes at GDC this year was creator economy, which is all about, like in the crypto world, is peer-to-peer payments around it. So it's a really cool part of it. So Megan, nothing makes me happier than when I can have a panel with some people, a little bit of friendly disagreement and tension here. So you guys actually did build a streaming payroll product and have been trying to find people to use it, but people haven't been clamoring for streaming. Give me a little bit of insight into why you think that is.
Yes, so our CTO, Sean, right over here, is the one that built it, so if you have any technical questions about it, he's your guy. I think that it's, we have a pretty specific use case with payroll, and it like harkens to this bigger issue of like being able to match up your cash flows. So like if you have like net 30, revenue coming in, does it make sense to be paying your staff in advance or in real time? So I think that's probably the primary sort of like situation that we've come against, where when we have companies that are onboarding to our payroll software, they're looking for a much more sort of like Web 2 type user experience and type product, but they want it to be crypto enabled. Mm-hmm. And so part of it is, I think, we have a particular use case that, it's extremely early days, and I'd be interested to hear what these guys have to say too.
Yeah.
But part of it, there was a guy up here talking, I think from Huma Finance, mm-hmm. about factoring receivables and, mm-hmm. and the sort of like implications of like what that does for the cash flows and like the operations of your business. And so like, I think we can conceivably see in the future a period when we just have more real-time payments across the board, and the time for receivables compresses because we're working with technologies that can settle, essentially instantly. And I think when we see more of that sort of like larger business economic activity settling faster, that kind of technology it'll be a given, right? Why should you have to lend your time to your employer 2 weeks interest-free, right?
That always bothered me, by the way. Since the very first job I got, it annoyed the hell out of me that you were essentially lending your employer money as part of your day-to-day job.
It doesn't make sense, right? It doesn't make sense, but operationally it's the standard, and to change a standard, it takes time. But
I think like a counter argument to that too would be there's a lot of human intervention to make payroll, to make these payments, and so things that are static, if we can program them through a smart contract, you're also, we're all squeezing for cost-cutting measures right now and finding ways that we can automate processes instead of having human intervention or having, kind of a rote activity being performed. So being able to utilize the smart contract or, through streaming payments for things that stay pretty static, is also a way to kind of grow your business.
yeah, I agree.
Just to add to that, I think I would tend more to be on your side, Megan, when it comes to payroll, particularly, because I just take our example. We've been live for a year, and we haven't had customers coming to us saying hey, our workers are asking to be paid per the second, So yes, per hour with hourly, and timesheets, per day, per week, per biweekly or monthly, but a constant flow of payments going to contractors or employees, and can't do that in the US actually when you pay full-time employees. We haven't seen that yet.
All right.
So.
Well, that's interesting. So Megan, you said the magic word, which is factoring, and Toph's eyes lit up because I know Request is working on both factoring. I know you're also working on a Superfluid integration to look at how to do streaming. Tell me, so first of all, just for the audience here, I think everyone does know because this is a smart audience, but what is factoring? And then talk a little bit about your guys' vision for it, because I think it speaks directly to the blockchain as a whole and how we're thinking about this problem.
Yeah, so factoring, I won't teach factoring here, I guess. The thing is, we now have the possibility with Request to bring those trade finance products on chain. The prerequisite for that was to have an asset to finance on chain. So everyone is talking about real world assets. On-ramping real-world assets on-chain to use them as a collateral and so on and so on. And some people, like Erbil at Yuma, you mentioned, discovered that financial assets were already existing on-chain, thanks to Request, because it's been 3 to 5 years that we are processing on-chain invoicing and payments. And all these assets are now tradable. We can build products about factoring, but any other product about trade finance, credit insurance, any trade finance product can now be on-chain, and I think it becomes a really hot topic because we processed 300 million over the last 2 years, so now we have a decent base of assets to finance. And all the liquidity pools, lending protocols, even borrowing protocols, NFT lending, anything is really interested in that topic because we are now talking about a multi-billion-dollar market in traditional world that we can bring on Web3 rails.
Yeah. So Megan, let's get back to you really quickly. So one of the things that you guys do is this notion of hybrid crypto and non-crypto, I guess, fiat payroll. Talk to us a little bit about the complexities there, because that goes into everything around payroll. There is no payment that I think any of us are entirely crypto or entirely fiat at this point. Bitway, we take about 20% of our customers pay us in crypto, which is phenomenal. We love it. It's awesome, but we're still living in a hybrid world. Talk about the complexities of hybrid payroll.
Yeah, I think that really what it is a tool for companies that have multi-currency balance sheets. So when I was VP of Finance at Serotonin, we were similar. We took in revenue in different stable coins, on different chains, in cash and other tokens. And so figuring out how do you make a multi-currency balance sheet more useful and sort of thinking about compensation as kind of a spectrum. So if you have US W-2 employees, maybe they want your standard cash, money in the bank, direct deposit. If you have international contractors, perhaps they want to have exposure to US dollars. We see this with some of our customers who have developer populations in Argentina in particular. It's very exciting, or it's in high demand to give them exposure to USD, and a great way to do that is via stablecoins. And so the idea behind Franklin is you can mesh these kinds of currencies together in one sort of software, bringing the best of, what you have in like a Web 2 sort of familiar user experience, and also non-custodial smart contracts on chain that can move money very quickly and cheaply.
Awesome. Hugo, let's go to you. So tell me, we spent a little bit of time talking about this. I always tell this joke, and everyone's gotten sick of it at this point, which is like there was this story that like early on in the history of cars, they took a car, and like one of the first cars, they took a stuffed horse's head and they put it on the front of the car, and they basically did that as like this form factor to make the other horses on the road comfortable with this thing walking around or driving around, but then also to give the user the ability to like conceptualize this thing they're using, right? And so what both of you guys are talking about, especially as you were saying streaming payroll isn't hitting yet, strikes me as like we're kind of in that stuffed horse's head version of crypto right now, where we're adapting current processes to the crypto world. So talk to me about what you think happens 5 years from now. Like once we've gotten through this just getting it kind of ready to crypto phase, what's the next future?
I mean, I think for now, today, there's a lot of education that needs to be done to all these traditional CFOs, operators, managers, accountants that want to learn about this new world, this new ecosystem. 5 years from now, what we see here is companies processing or using payroll systems or payment systems that are independent from the traditional world, that have those dual infrastructures, and processing, not worrying about what their workers want around the world. So if they want fiat, they can get paid in fiat. If they want crypto, they can get paid in crypto. But as the manager, you don't want to have to deal with that. So that's the experience that we're trying to build, really decoupling the two.
Yeah. Great. Okay. Let's get back to streaming, because I don't want to stray too far about it, because that's like my favorite thing we've been talking about today, honestly. Mary, if you guys don't know, Mary is an incredibly accomplished technical accountant. When I have hard technical accounting questions, I call Mary for help. Let's talk very briefly about the accounting behind streaming, because it ain't simple. Give me your thoughts about it, how you are thinking about it.
Yeah, and I think it's helpful to differentiate where you are on the ecosystem as well. So if I'm a creator and I'm receiving these streaming payments, I'm essentially earning revenue. Back to Mackenzie's earlier discussion, I'm earning revenue at each one of those steps. So if you're streaming a payment because I'm doing a TikTok video or a YouTube video, I'm kind of satisfying that performance obligation over the course of that episode, let's say. So you need to think about when the fair value of when you're actually receiving that crypto, which you may not know. I mean, are you receiving it in your wallet? To Mackenzie's earlier point, is there a claim type of activity that you have to perform? So knowing how to fair value that and when you actually take control of the crypto is going to be very important. Equal side on the expense. And then you also kind of bringing up more of a traditional thing to think about. If it's a contractual service, did you initially contract for that service in crypto, or did you contract for that service in US dollars or whatever your functional currency might be? Because if you contracted it in one currency, you're settling it in another, potentially you've written a forward contract on that crypto asset that you then have to mark to market your payable and your receivable. So it gets super complicated, super fast, and whether you think about it on kind of a second by second basis, a block by block basis, can all vary for the accounting.
I'm gonna hop on this one.
Yeah.
So Pat, you mentioned that we integrated Superfluid recently. So yes, the integration is live and running since weeks. So we just announced it like a few days ago. The way we tackle the topic is whenever you open a stream to an employee, to a contractor, to a vendor, a subscription, whatever, the integration of Request and Superfluid enable both the payment stream, plus at each end of month, week, whatever the pace is, you have an accounting piece that summarizes all the money that have been streamed over the last period of time. So you benefit from both the payment stream and the compliance of having like a paper trail that you can bookkeep in any accounting software.
Yeah, so Mary, back to you on that, because that's a good point. How do you think about the discretization problem of this, which is choosing a layer of discrete, which is, we're talking about this, which is maybe looking at the overall lifetime of a payment or at least some sort of portion of it, versus with a YouTube video, you're now talking about a 30-second discreteness. How are you guys thinking about that?
Yeah, so I think it goes back to, what's your accounting policy and what's the time period that you're doing this over? So is it something that's being satisfied, per second, or is it, payroll at a contractual set rates? And because in theory, you'd have to define your performance obligation, allocate the transaction price at the inception of the contract, and then recognize your revenue, which doesn't really change. So I think it goes back to what is your accounting policy? What is your performance obligation? Do you have multiple performance obligations, to your points? And it could be different.
This is going to be
especially
really
in a world
tough.
where we're going up and down, up and down, up and down.
So Hugo, and then I'm gonna end with you, Megan. But Hugo, tell me about L1s versus L2s in terms of the international community. And this is kind of a broad topic, but we've covered L1s and L2s over the entire course of the day. It's been a constant companion to us all here. Are you seeing, if I'm paying someone in Argentina, where $3 of gas fees on Ethereum that's real money, right? That's not a cup of coffee. That's half a week's salary. Are you seeing pickup of particular L2s? Are you seeing demand for L2s? How are you seeing the interaction there?
So we're actually seeing more and more demand for L2s. So when we draw a pen, we used to see, at the beginning, a lot of L1 withdrawals. And obviously, we're trying to educate our users. Like, if you want to use crypto, you're better on an L2, because everything's more efficient, scalable, and cheaper. And it's starting to pick up. We're starting to see more and more usage, more and more demand, and actually contractors plugging in their wallets and saying, I want to withdraw USDC on Arbitrum. So Arbitrum is definitely the L2 that we're seeing the most demand for, and we're actually built on it. And yeah, we're trying to move ourselves away from L1 basically.
I think one other consideration that we think about on that point is, in addition to the speed and the lower fees, is also the privacy. So on an L1, when you can see all of the transactions coming through to your wallet, whereas on an L2, you have more privacy. And if you're thinking about sending day-to-day payments, or if you're a merchant that's receiving payments in crypto, you might not want the blockchain world to see how much you're receiving at any given time or what's going into your wallet. So it kind of aligns more with like traditional, payment networks where you don't know exactly how much is going to any specific merchant or person. So the L2 provides that additional level of privacy that I think is incredibly important as you think about payments.
That's why we call this the year of payments, because it's the first time we actually have that infrastructure ready to go. All right, Megan, I'm going to give you the hardest question, which is you have a minute and 7 seconds to summarize the complex compliance, the complexities of compliance around international payroll.
Okay.
Just when you're ready.
Cool. Yeah, just to speak to the previous point about L2s, we found that lots of companies are still holding their treasuries on mainnet, which is interesting. I think that when we see more exchanges being willing to accept or do deposits withdrawals on different L2s, that'll be like a really big pickup. And I think that building, consumer-facing or business-to-business facing apps, the sort of in vogue thing to do is pay for gas fees. So that's what we do, and we try and bake it into like our revenue cost. But
we'll skip the compliance because that's too big. Is there a dollar point for gas fees for the rest of the world? Because I know, honestly, in America, like we see gas spike. We joked about CryptoKitties earlier. It doesn't affect us. Like, is there a price point where Argentina needs gas to be able to actually use it effectively? Have you seen that?
No, I mean, I think we like the burden's really on the employers, and like if they're using Franklin, it's the burden's on us to pay for it. So, but yeah, I mean, off-ramping and doing things with your paycheck in crypto, it'd be better for them to be on an L2.
Spectacular. Well, thank you guys.
Satoshis.
So sats. Stacking sats.
Stacking sats.
Stacking sats. Thank you guys so much.
You.
Absolutely wonderful payment. Thank you. Thank you. Great panel. Really, really, really fun.